Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, January 3rd, 2023. So we've now completed the first trading day of the year, and in this video I'm going to do an update sticking with the stock market. We're going to look at the major indexes, the S&P 500, NASDAQ 100, QQQ, and then some of the sectors in the S&P 500. There's some developments there, or what I should say, potential developments and levels to look out for that I think could really determine the next tradable trend here in the market. So I'm going to get to those. I've had a couple some issues with the my recording device, a new computer I just set up recently, and so I've already done this video a couple times, not realizing the issues with the microphone. So I finally got that sorted out. So I'm going to try to condense this one. Since I've already been through it a couple times. Anyway, big picture is this. Today we closed, the S&P closed down 0.42%, so virtually flat, and go nowhere. It tells us nothing. There's no significant technical developments to report today. Nothing new happened because you can see when we zoom in, we're right into this trading range that we've been in all the way back since mid-December right there. That's December 16th, that candle. There's the trading range, and this is what I talk about. This is where you head into the holidays, and typically it's just tough trading, tough for swing trading, and it's a time period that if I didn't have the site, I would have probably been off taken the whole month of December off. But with that being said, to at the risk of oversimplifying it, an upside break of that range is going to be bullish and likely give us a rally. That rally can measure anywhere from probably, I'd say 5, based on my targets, 5 to maybe even 10%. Maybe make another run at the downtrend lines. When we look at, turn off all the lines here, you have primary downtrend lines on all the indexes and most of your sectors. Very clean downtrend lines. Just draw them off the highs and the bear market highs. And I'm trying to get a line tool to do that, and this should work right there. And so that's that. So you can see this is what a trend line should look like right there. Boom, boom, boom. If we do rally up to it, no guarantees that we'll get rejected off it again, but I can tell you if the charts confirm at the time, that would be an objective short entry add-on. We may never get there. I'll tell you, typically when you hit it, that's it. In a bear market, that's the next leg down, and it's if you didn't get shorts there, the bear markets usually deny any other exits on longs that didn't get out or short entries. So I could sit here all day long, and I've been doing that for the last couple weeks, telling you when I look at the long-term charts, the weekly charts, monthly, pretty darn bearish, and I can make a strong case that we're going to take in another leg, that the next leg down in the bear market to new lows, to my next targets on the weekly charts has already begun, and there's still a very good chance that'll be the case. However, I'm going to go through in this video today that make the case for a near-term rally. And I'm going to show you everything, or not everything, but some of the things that are going to firm that up to get that 5 to 10% plus rally. All right, let me just finish off with how the index is. Well, no, I'll just stick with S&P while I'm here. This is one of the things. If you recall, a few weeks back, a couple months ago or so, back in November, I started harping on the PPO and highlighting what at the time I said looked like a likely and imminent bearish PPO crossover. It's a great trend indicator. I'm going to park the RSI here, get it out of the way, and I'm going to put up the PPO histogram. Again, for most of you, this will just be a recap. For those of you just coming onto the site or just catching up, if you weren't trading for the last last month or so, I've highlighted this very effective trend indicator, and those are bullish and bearish PPO crossovers. So you had this one right here, that was a bearish crossover. It came right there. In fact, you go back, this is where the bear market started. Bull market ended right here, bear market began, and you can see if you go back in time to that point, when the PPO crosses, that's what's shown right here. When the histogram goes from green to red, it means these PPO lines, the PPO crosses the signal line, makes a bearish crossover. And I've covered this 100 times. I don't want to go into too much detail. You can go over your own chart. Look for these hills. Stay away from using that as a trend indicator when the lines flatten out like this. That's not a good time to use it. You want the clean separation. You can see it here. the farther apart the lines are. And you can also see up here, the PPO histogram is just a visual representation of how far apart the lines are, the differential in price. And so you get these what I call clean hills, and those are your trends. You want to be long, and it tells you that's a nice trend. Then you get a bearish PPO crossover, you go short. Now, I don't use this as a standalone buy and sell signal. I use it in conjunction with other buy and sell signals like price breakouts of trend lines, price support levels, rallies into moving averages to short, things like that. But it's done a pretty darn good job of saying, hey, let's be short or let's be long and game the counter trend rallies. And not only that, it also has predictive value. Not 100% effective. There is nothing 100% effective in the markets when it comes to signals, but you can just eyeball the histogram and see when it's heading up or heading down. It doesn't take a rocket scientist because that's the trend is slowing. The trend is waning. The bullish trend is waning, and ultimately you usually get those crossovers. Now, every now and then, the zero line often acts as, in other words, these lines together can act as support or resistance. So sometimes it looks like you're going to get a crossover, like right there. You had a little rally, but you didn't, and you got rejected, and then there was another big leg down. So the takeaway is, don't look at this and say, oh, yeah, Randy, I can see that's heading up. We're going to cross over. It's almost a sure thing. I'm going to go long and stay long. No, if you get rejected, if the lines get rejected, don't make the cross. It can be pretty powerful the next leg down. To me, it looks like we're going to get it. I'm right now in my trading account, I'm betting we're going to get it. I'm still long as of now. I could be stopped out tonight by the time that, before, I wake up tomorrow and I'm stopped out if there's a big leg down tonight, and that's fine. But as of now, I'm, in the active trading account betting, long. Plenty of room to add. I'm going to get to the levels that we need to take out. It's pretty simple. We need to take out today's highs. I was saying where we started this morning. We got rejected off those resistance levels that I highlighted that we need to take out. And then in the trade and the longer term accounts, I'm still hedged up because my confidence isn't very high. I can make a great case to be short, swing short, and I can also make a pretty decent case for at least a near-term rally before the next leg down. And therefore, that tells me, well, I can just gamble and put it all on long or all short, or I can take, as I've done, some Amazon and Apple and take some of these what I call indirect hedges to my NASDAQ 100 shorts and that stuff. I am, by the way, if we do get the New Year's rally that I'm thinking there's a decent chance of, then tech, I like tech, NASDAQ 100, and small caps, which I got both those charts out to you today. All right, so that's it. We're going to watch these for the next PPO crossover. And if you break the price support levels that I covered earlier, and I'll go over again, you're probably going to get those at least. There's a little work to be done, and you can see the SPY S&P 500 is closer to getting it. So if we can pop above the recent trading range, make another run to the 200 days, you're probably going to get that bullish PPO crossover. But again, you got a lot of resistance coming in, not too far ahead. So right now it could be measured out. Where's my downtrend line? Right here. Let me see if I have a different board that's a little more clean. Yeah, there's the downtrend line, the 200 days. So that would be about 6% or so if we rally up there. Not to say that we can't take that out. Obviously, it'd be bullish if we did. But let me show you the other indexes too. So there's S&P 500 is close. PPO is curling up. Looks like it wants to make a crossover, but again, I had to caution you, it hasn't made it yet. NASDAQ 100 is lagging behind. Tech has been lagging throughout this bear market, really. But in the rallies, it tends to pick up speed. And again, I think there's if we can hold these recent lows and break above today's highs, I think you're going to get more bang for your buck trading some of the tech names and small caps. In other words, a risk-on market for a little bit here if that happens. Let me go back to here. So I just wanted to highlight that the PPO is still not, it's not looking like it's going to cross over anytime soon unless we had a really big rally. It would take a big day in the NASDAQ 100 to get a crossover, let's say tomorrow. Possible, but might take a few days if we do rally. But again, something to watch for. And then IWM, small caps, that one's a little closer. You can see here. There's the PPO histogram. Here's the PPO lines poised to cross over. Closed today at negative 0.121. So very close. One or two more good days here in the Nasdaq, Russell 2000. And there's the price resistance level on the daily, about 177.68. I also got a chart out to you today on the RTY, the small cap futures. This is our holiday. We'll call it the Christmas trading range. That goes back to mid-December right here. Like everything else, we've been bouncing around. Let's keep it simple. Upside break bullish, downside break bearish. We have positive divergence on the 60-minute chart on IWM, SPY, QQQ, which is what tilts me towards the bullish resolution. But then again, I can sit there and make a pretty darn bearish case on the long-term chart. So that's why I'm not all in bullish right now. Just more what I call cautiously bullish, and also waiting, to get, a little more aggressively bullish, a break above today's highs. Remember, that was a little pop, and it filled. I covered this earlier today. It just back tested the bottom of this gap right here. And it also, at the very same time, again, this was covered earlier, NASDAQ 100. NASDAQ 100 got rejected off that 11,175 resistance right there, and that was a drop. And so this is that trading range in the NASDAQ 100. There's that little brief breakdown, and that's it. That's our Christmas trading range. Go boing, 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 up, down, a little false breakout, back to the top of the range, down, up. And so if we can rally overnight in the futures or tomorrow, and then I think if we get it run at the 11,175 level again, we'll probably break it out and then get that rally. But you have to respect a downside break. So far, the price action, like I said, if you want to give a checkbox or to the win today, bulls or bear, you have to give it to the bears because we're down. But again, it was a low volume day, first trading day of the year, and we're smack in the middle of the recent trading range, so you really can't read too much into it. Okay, sectors. We're going to rifle through the sectors, and I will wrap this video up.
Market data connection
Again,
lost.
I'm looking at the PPO on the daily. This is where
Market
a few
data
weeks back I was looking at these
re-established.
bearish crossovers. We got it there, and then the top came. There was also, if that wasn't enough, that came right before our rallies into the downtrend line. So this was XLK, the tech sector. This is the largest sector in the S&P, makes up over 25% of the S&P 500 and about half of the NASDAQ 100. So by far the most important sector. PPO is lagging quite a bit, so we're not crossing over anytime soon, but it is starting to curl back up. Now again, it may start to go up and could go down, like back here was moving up, but we weren't anywhere near crossing over. There's an example of a whipsaw, one day crossover, and then a rejection there. So again, I don't want to put too much into the crossovers, but I also don't want to put too little because they've done a, again, if you step back, filter out the whipsaws, say what you want, just look at these hills and just look at what price did when you were down, when you made the crossovers. All of the biggest trends that we've had, up and down trends, since the bear market started a year ago, they've all been clearly, identified by these big hills. So even if you took this system purely mechanically without anything else, I'm pretty sure you'd be well ahead, beating the market overall. In other words, short when the histogram's red, long when it's green, but I like to use that in conjunction with other things. I like to anticipate, breakouts and trend changes and all that. So XLK, not there yet, work to be done. XLV, work to be done. Still a little bit below there, but the PPO is turning up, and you also should note that XLV, the PPO, so the crossovers themselves, the bullish and bearish crossovers, when these lines cross, is one trend change indicator. And another very useful tool using a PPO or a MACD is zero line crossovers. In other words, when the lines are above the zero line, the trend is bullish, and you want to be long, or it's telling you that's what the trend is. And then when you cross over and you're below, the trend is bearish, and this has done a great job. Again, you can replicate this on your own chart and just look at the what happened after the bullish and bearish crossovers. And not only that, but once you're above or below, those lines often act as resistance from below, support when above. So if the bull case would have XLV, the PPO, turning up here, holding above the zero line, making a bullish crossover, and then getting back above the recent highs. That's the PPO. Now, from a pure price perspective,
Market data connection
um,
lost.
what you have, and I've highlighted here, there's been about a 2-year big
Market
topping
data
pattern.
connection re-established.
Okay, I don't know where I left off because I hit the pause button. I'm sorry, guys. I'm really tired. I've been doing this. I've had the audio issues, and I've tried this video several times. I've been sitting here a couple hours trying to get this out to you. I'm going to wrap up with this one in the S&P 500. This is XLE. I was wanting to point out we recently had a bullish crossover on the PPO, but we're curling back down. And again, this one, it's all about these recent Christmas trading ranges right here. You can see, we shorted this one back here on that sell signal there, the breakdown, then here again on that divergent high, and then S1 was first support. We hit it first target right there. I said a bounce would be likely, a favor to reaction off that level, which we got, but that reaction took us back up to where I figured S1 former support. It's really R1 now, resistance 1. And we've been in that Christmas trading range. So to keep it simple, a pop above is bullish. You also have a downtrend line that would be taken out, whereas a break below is bearish and would take us down to those additional swing targets and also flip the PPO back to a sell signal. But again, this one's done just a phenomenal job, like the S&P, since really the bear market started. If you look at just these ranges, this said be short, the trend is bearish, and that you got that. This said be long, the trend is bullish, and you got most of that. Bearish, you got most of that drop. Bullish, you got most of this big rally here. And of course, bearish from right when the bear market started, and you got most of that. It told you to be short during that. And then the one that I don't know if it covered in the video, because again, I'm kind of tired now, and I hit the pause button and missed that it didn't. The recording was stopped, and I was going through a few more charts on the other sectors, showing you a lot of the sectors, some closer than others, some are close to giving you the bullish PPO crossovers. But then on the S&P 500, what I wanted to point out is that I use the often it's a zero line that delineates the trends, but every security or every index is different. So on the S&P, I have a line right now at 0.64. And again, if I already covered this, my apologies. But we're back testing that from above. So if we can hold above it and then get a bullish crossover here, that's going to give us flip the trend indicator to bullish, and it might give us that early New Year rally, we'll call it, if we get it. Otherwise, again, keep it simple. Look at this recent trading range. Bulls are going to jump on it if they can pop it above there. I'm sure there's a lot of stops placed above 390 on SPY, and I imagine there's also stops on short sellers, I should say, I'm sorry, and a lot of buy orders. Buyers will step in. Likewise, if we drop much above, I don't know, that's about 378, at that bottom of that trading range, that's going to be bearish. Of course, this market's plagued with whipsaws, so I can't guarantee you that we rip up if we break to the upside, but it's easy. React to it. There's nothing wrong with, if you have a downside break and you short and then you see a reversal and you get back in the trading range, that's where you cover that short and or go long. Likewise, if you break out to the upside. But as of now, again, I favor leaning towards, not crazy about it, but leaning that way, position that way in the active trading account for a move up here at about 280. Again, on QQQ, that's about a 6% rally if we get it, but it's not going to happen unless we take out the recent high, especially today's highs there. All right, I'm going to wrap it up here. Again, this has been Randy Finney with Right Side of the Chart. Have a great evening and Happy New Year to everyone.